Okay, let's dive into a story that's part financial detective work and part a massive bet on the future of one of America's oldest car companies. It looks like a Wall Street whale is putting $1 billion on the line, and we're going to break down exactly why. So you have to ask yourself, what is the deal with this massive bet? I mean, this is not just some casual investment. It is a highly structured, super high conviction play. What does this trader see in Ford that maybe the rest of us are missing? Well, that's exactly what we're here to unpack. And the scale of this thing, it's just immense. We're talking about a single trade of 15,000 options contracts. Now, since each one of those contracts represents 100 shares, this single position gives the trader control over 1.5 million shares of Ford stock. This is a huge institutional level move. All right, let's get into the specifics of the trade itself. We are looking at a very sophisticated financial maneuver. It's designed to profit big time if Ford's turnaround plan actually works over the next year or so. The core of the bet is actually pretty simple. This trader believes Ford's stock is heading higher by March of 2026. But the way they've structured this bet, that's what makes it so fascinating. This isn't just buying the stock, no. This is a much smarter, more complex play. So the strategy is called a risk reversal. Yeah, it sounds complicated, I know, but we're going to break it down. Think of this as us opening up the Wall Street playbook to see exactly how the pros make these kinds of moves. In simple terms, a risk reversal lets you make a bullish bet for very little, or in this case, even zero upfront cost. It's kind of like using the money you get from one bet to immediately pay for another. That is essentially what's happening here. It's a really elegant way to express a strong opinion on where a stock is headed. Here's how it works, broken down into two simple steps. First, the trader sells put options. This is basically them betting that Ford stock will stay above a certain price, in this case $13.50. Then they take the cash they got from that sale and use it to buy call options, which is a bet that the stock will go above another price, $14.50. Now, check this out, because this is the brilliant part. They collected 30 cents a share for selling the puts, but they only had to pay 20 cents a share for the calls. So not only did they get their bullish bet on for free, they actually got paid 10 cents per share just to put the trade on. That's a net profit of $150,000 right from the get-go. Okay, so why? Why make this huge bet on Ford right now? Well, the answer seems to lie in the company's three-part turnaround plan, what they call Ford Plus. This is the fundamental story, the thesis that underpins this entire trade. First up is Ford Pro, the commercial division. You got to think of this as the company's cash flow fortress. It sells work trucks and vans to businesses, and it's incredibly dominant, owning over 42% of the U.S. market. And it's not just about selling vehicles. It's also a growing, high-margin software and services business that's pretty much funding the rest of the company's transformation. Next, you've got Ford Blue. This is their traditional gas and hybrid vehicle business. And while everyone is obsessed with talking about EVs, Ford's hybrids are absolutely booming. Sales are up nearly 25%. This power of choice strategy is a really profitable bridge, and it caters to customers who just aren't quite ready to go all electric. And finally, there's Ford Model E, the EV division. Now, this part of the business is losing a lot of money. We're talking nearly $5 billion last year. But the key here is the strategic reset. Ford is shifting its focus away from those expensive, low-volume EVs to more affordable next-generation models, and they have a clear goal of breaking even by 2029. So how does this all translate into the numbers? Because at the end of the day, that's what this big Wall Street bet is really all about. And the evidence suggests a pretty significant jump in profitability is just around the corner. This chart really tells the story. Ford made $6.8 billion in profit in 2025. For 2026, they're guiding for somewhere between $8 and $10 billion. That's a potential 47% increase at the high end. You can see why this is the core reason for this big bullish bet. So where's all that extra profit supposed to come from? Well, a lot of it comes from simply not having the same problems they had last year. We're talking about one-time issues like tariff timing and a key supplier disruption that cost them billions. When a single supplier issue can halt an entire production line, just recovering from that alone is massive. With those problems in the rearview mirror, profits are really set to rebound. And they absolutely have the financial strength to see this through. With $50 billion in total liquidity and $29 billion in cash, Ford has what you'd call a fortress balance sheet. That is a massive safety net, giving them more than enough capital to fund the EV transition while still paying dividends to their shareholders.
Okay, so this is the crucial point, understanding what happens to this trade when it expires in March 2026. How does our trader actually make money from this? And, what are the risks involved?
There are really only three ways this can play out. One, if Ford stock soars above 1450, the calls are worth a fortune. Two, if the stock just stays flat somewhere between 1350 and 1450, both options expire worthless and the trader simply keeps that initial credit they got paid. And the only losing scenario is if the stock drops below 1350. And even then, they're just obligated to buy the stock at a great effective price of 1340, a price they were clearly happy to own it at in the first place.
Of course, no trade is without risk. I mean, a bad economy, continued quality control issues, a brutal EV price war, any of that could derail this recovery. The company also carries a lot of debt, which is always something investors keep a close eye on. But this quote really sums up the entire thesis, doesn't it? The bet is that 2025 was the year of tough medicine. Ford took its losses, it cleaned up the books, and now it's poised for a much healthier, more profitable future, all powered by that dominant commercial business. And that leaves us with the final question. Is this trader a visionary, seeing a clear path to profit that others have missed? Or are they making a really dangerous bet that a 120-year-old giant can successfully reinvent itself for the electric age? Well, only time is going to tell.